also am the type of person, I'm not that old, but I think I act like an old lady where when you can touch things, that's kind of nice. So it's digital gold, but it's not something you can pick up and hold,
Hey,
right? So it's just a little bit.
Costco's selling actual gold bars, and people love it.
I
So
mean,
I mean, it's
like
different.
let's go. I need my Costco
Yeah.
card. Welcome back, everyone. I'm Tara McBride, Chief Marketing Officer at Prime Capital Financial. Today, we're going to tackle the topic that's come up again and again with our advisors and clients, crypto. Spicy is the word that comes to mind when I think of crypto. We've seen this digital currency take a nosedive of more than 25% in the last month or so. Still, that's after having been up 600% since 2022 and even 136% since earlier this year. So it's all enough to really make your head spin. If you have questions about whether your portfolio is properly stress tested for any market ups or downs, let's talk. Scan the QR code on your screen for a complimentary second opinion on your current portfolio. In the meantime, we have the professionals here to help us decipher it all. Back in the hot seats are my colleagues, Deputy Chief Investment Officer Will McGough and Portfolio Manager Clayton Allison. Guys, fantastic to have you back. Let's get into it. Will, what's the real story behind the sell-off? Is crypto taking its own little holiday, or are you seeing this tied directly to bigger economic pressures?
Yeah, thanks, Tara, and thanks everybody for joining in. So the straight up answer here is that nobody really knows or can predict how Bitcoin is going to move because it's an asset class and an investment that moves based upon supply and demand, meaning buyers and sellers determine the price because there is no underlying economic or fundamental value since there is no cash flow like a stock or a bond. But I also want to say I liked how you mentioned the upside moves. I think it's important to caution investors that with upside also comes downside. And since 2017, Bitcoin has had 10 declines more than 25%, 6 declines more than 50%, and 3 declines more than 75%. So to answer your question, I would just expect volatility and who knows? Maybe Clayton's got some better answers since he's a little smarter than I am.
It seems like we've learned this since we were kids, right? What goes up must come down. So I think that's a really great point, Will, that there's ups, there are downs. But I would be curious, Clayton, from your perspective, it seems for a while the pitch was that crypto was sort of becoming this like digital gold, a sort of shield against inflation. When it drops 25% alongside everything else, does that idea really hold any water anymore? And how do you defend including a digital asset that moves like this inside a client's otherwise disciplined portfolio?
Yeah, I think first off, that's a great question, Tara, and a lot of what Will said prior to this kind of articulates that, which is a lot of this is speculative. I know people want to do attach, oh, it's digital gold. When it first got created, now gold's whole shtick is that it's a great store of value. It's got a 5,000 year track record. Bitcoin has like a 15-year track record, and it trades very speculative. All the fund flows are pretty much from speculative retail and other factors such as that. And it really seems to be more correlated with tech-oriented risk-on assets rather than gold in its own nature, which in an inflationary environment, typically, like we always like to articulate to people, stocks are a good inflationary hedge because those appreciate faster than your dollar will debase, essentially. So by it having a higher correlation with tech, you'll kind of see that. And as we've seen over the last kind of week or so, tech has started to sell off. And because of the volatility attached with Bitcoin and crypto as a whole, you're really seeing that kind of get dragged down even faster. Because when you have this kind of sell-off and this liquidity crunch, well, more times than not, people are going to go sell their most volatile assets first to free up liquidity. So that there brings you to Bitcoin getting sold off, falling around 25%. Like Will mentioned, it's up like 600% over the last year or something like that, some crazy amount. But to parlay that into your question of how do people kind of mitigate this volatility and manage this in their more diversified portfolios, what we always say is very, very, very little allocation to this. It is very much a speculative risk-on asset. There's nothing fundamentally driving it behind it other than supply and demand. So if you want to have it in your portfolio, we really recommend you keep that to like 1, 2 to 3% of your portfolio and definitely no more than 5% of your overall household. And you got to really make sure you come to grips with how much are you willing to stomach volatility and risk. Otherwise, it's really not suited for you.
Yeah. I love the idea of like, hey, balance, we always have balance. What's the level of risk that you're comfortable with? and maybe just having a small portion of your portfolio that's allocated to this. It kind of reminds me of I'm sorry to my husband, I keep mentioning him, but at the beginning of football season, he has a pool of money, a small little pool that he likes to play with, that he likes to bet with on games. And at the end, he's either up or down, and that's that. But it's just a very small portion of, his income is going to betting on football. So, Will, let's wrap up with one more question for you. When the market turns like this, how are investors looking at this overall? Is there an opportunity to use something like this drop as a chance to add to a position?
Yeah, and I love the conversation. This is an asset that could go up 10 times what it's worth right now, or it could go poof, depending upon what happens with it. There's some risk with getting hacked and all that. So it's down 25%. We know it's had volatility down 75% or more. If you're an aggressive investor and want to use this opportunity as a pullback, it could make sense for you. That said, when things get sideways with Bitcoin, it gets sideways really quick. So the proverbial trying to catch a falling knife is at play here. You could get cut pretty easily. And so I like to tend to wait for things to bottom and then see volume increase back to the upside personally. But that said, aggressive investors certainly could. And as Clayton mentioned earlier, if you had a 5%, which kind of would be a max allocation here, and it's down 20-25%, it's gone to 4%. So you do rebalance back to 5% in the overall portfolio, potentially. But again, it's best to work with a financial advisor that knows your situation here, because when you're dealing with volatile asset classes, you have to think about how it affects everything in your portfolio. And you don't want to just kind of look at a small piece, because the overall goal and objective of having retirement assets is to grow over time. And this is kind of a narrow asset class, and stocks and bonds should be the main driver for meeting your goals and objectives.
Yeah, it's great to have an advisor out there who helps you just kind of balance everything. And to your point, Will, has eyes on the full picture, not just this little sliver of what you're trying to do. So great point. As always, that's the big message, the big headline every time we talk is having a professional in your corner really does help. Will, Clayton, thank you both. The takeaway here is clear. Don't panic. And most certainly do not let a headline dictate your long-term strategy. Talk to your advisor, as we always say. And if you do not have an advisor, what are you waiting for? Scan the QR code on your screen now to speak with one of our financial professionals to get the conversation started. Thanks for tuning in, and remember, stay informed, stay invested, and as always, we'll be here to help you navigate the twists and turns of the market. Until next time.